Good morning, Paul Georgie from Allendale. It's June 3rd, 2010. Well, this morning, grain markets expected to open steady to a little bit higher based on outside markets. Again, is the one of the main factors. The dollar currently is down 11, crude up 21. Stock market showing some strength here this morning, up about 42 right now in the future. So that could translate to higher Dow opening here at the New York Stock Exchange. Some other things that are going on. We've got the unemployment numbers out tomorrow. That will have an impact on the financial trade here today in anticipation of that. Also, we've got some countries that are on holiday today. Brazil, Poland, Germany are all on religious holiday today. The grain markets, specifically the corn, yesterday took out support, long-time support here at the 351.5 area, closed below that. Today, technically, the resistance going to come in now at 353 in the July corn, 357.5 next level, 347.5 first level of support here today, with 345 being the next level. A downside target, I think, what the bears are looking for in the grains right now, 333.5 is a low that they're shooting for at this point in time. China news here this morning, not much on exports, but the Dalian exchange over there had corn markets down slightly here, so nothing too exciting. The export sales report, we're waiting for that tomorrow morning, and because of the holiday this week on Monday, they pushed that back one day, so we've got to wait till tomorrow to get some export sales out. In the soybeans, fundamentals continue to be bearish. Weather is ideal. China weather also is improving for their soybean production. We've also got South America, that Argentina especially is exporting more soybeans. Reports out this morning showed that during the month of April we had excellent or quite an increase in soybean exports from Argentina. The charts continue to be bearish there. Chart-wise, we've got support at 927.5, and then again at 920. If we took the 920 out in the nearby contract, that opens the door for a move all the way down to the $9 area. Resistance comes in today at around 937, and then again at 944 in the July contract of beans. Wheat, not much news there. The focus in the wheat market is the fund selling. It's continued to press that market to new contract lows here the last several days. That market is extremely oversold. Don't be surprised if we get some kind of a bounce there, and it could happen at any time, especially if we got some adjustment in these financial markets. You might see the funds come out of some of their positions. Fundamentally, we're going into harvest, and we'll continue to see more pressure in the wheat market from the fundamental perspective, and we're going to have that battle here in the near term. And right now, everybody is chasing the downside. So when it turns around, we could have a very sharp rally. But chart-wise, we've got support at 442 and then again at 435 with a downside target here at 425 in the July wheat. Resistance 450 and then again at 461. Over to livestock trade, some reports out of Russia here overnight that their beef production during the month of April was down 3.5% compared to April of 2009. It was down 2.9% from March. Could be a little bit supportive there, just kind of a news factoid more than anything. The cutout values were down 41 in the choice, down 39 in select. Cash trade, however, is seeing a little bit of firmness. $94 trade in Texas and Kansas yesterday. Offers this morning are at 95, 96. We expect that the balance of the trade here will probably around that $95 for the rest of the week. However, the cattle trade has some hope, but I think the biggest fear right now from traders is what's going to happen in these financial markets. If we have a collapse in the stock market, for instance, or a huge sell-off there, it's going to carry over, and we could see some more long liquidation in the cattle trade. And that's the kind of pattern that the technicals are showing right now. So there is some concern there, even though we've seen some improvement in the cash trade. The hog market, Russia's reported their production on pork was up considerably from a year ago, 37.3% compared to April a year ago, although it was down 1.1% from the month of March. The U.S. markets, we're seeing some stabilization there in the cash trade, although cutout value was down 131 yesterday. The reports that we're getting from cash traders is that the supply of hogs is expected to tighten considerably here in the second half of June. If that occurs, could provide some definite underlying support for these futures. Technically, we got major support here at 81.75 today in the July contract, resistance at 83.40. If we get much more selling pressure and we break the uptrend line here in these nearby hogs, that could activate some more sell stops, and they're also keying off of this financial market. So the fundamentals in the livestock we think are positive here, or positive outlook, but the focus will be on what kind of attitude the traders at the Mercantile Exchange might have based on these outside markets. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We'll be happy to answer any questions you might have. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.